Hey there, thanks for tuning in again. If you're just joining us, make sure to catch up on our last video where we talked about the different types of arbitrage trading, such as statistical arbitrage, fundamental arbitrage, and cross-market arbitrage. In today's video, we'll be continuing the conversation with how to make money with crypto arbitrage. How to make money with crypto arbitrage. This is easier said than done, but you will need to keep an eye out for significant differences in price between exchanges. This is to make sure you get the best profit, and take into account any reductions in the difference that may occur. You also need to be patient. Don't expect to find major differences every time you log in. And, of course, do your paperwork properly. Here are a few steps that you can take to try to make money with crypto arbitrage. 1. Research. Before you begin, it's important to research and understand the different cryptocurrency exchanges and markets that you plan to trade on. Look into their fees, rules, and regulations, and try to get a sense of their trading volumes and liquidity. 2. Identify price discrepancies. Use tools and software to monitor the prices of different cryptocurrencies on different exchanges or markets in order to identify any price discrepancies. 3. Make a plan. Before making a trade, make sure you have a clear plan for how you will buy and sell the cryptocurrency and take into account the potential risks and costs. This will help you to execute your trades quickly and make the most of any price discrepancies. 4. Use a trading bot. Automated trading bots can help you to identify and execute trades more quickly. They can also help you to make trades 24/7, even when you are not actively monitoring the markets. 5. Keep track of your profits and losses. Keep a record of all of your trades and make sure that you track your profits and losses so that you can understand how your strategy is working and make adjustments as needed. 6. Be aware of the legal and regulatory environment. Make sure that you understand and comply with all relevant laws and regulations in the countries and markets in which you are trading. It's important to keep in mind that crypto arbitrage is a high-risk strategy and it's not suitable for everyone. It requires a good understanding of the market dynamics, a lot of monitoring, and quick execution of trades. The market volatility is also an important factor that must be taken into account. It's always best to have a solid understanding of the crypto market and conduct your own research before deciding to engage in crypto arbitrage or any other investment or trading activity. The risks and rewards of arbitrage trading. Arbitrage trading is a strategy that involves taking advantage of price discrepancies in different markets to make a profit. The basic idea is to buy an asset at a lower price in one market and then sell it at a higher price in another market. While arbitrage can be a great way to earn a profit, it is not without its risks. Rewards. 1. Arbitrage provides an opportunity to earn a profit with minimal risk because the profit is made through the difference in prices rather than price movements. 2. It can be a low-risk way to earn a return on investment, as the difference in prices serves as a built-in buffer against loss. 3. Arbitrage can also serve as a way to hedge against market risk, as it allows traders to offset potential losses in other investments. Risks. 1. One of the main risks of arbitrage trading is that the market conditions can change quickly. 1. Arbitrage opportunities can disappear just as quickly as they appear, and traders may not be able to take advantage of them in time. 2. Another risk is that traders may encounter difficulties executing trades due to the fast-paced nature of the market. 2. This can lead to delays in trading, which can erode the potential profit. 3. Market makers and high-frequency traders can also compete with retail traders in exploiting these opportunities. 4. The risk of counterparty risk, that is the risk that the other party may not honor their side of the trade, is always there. 5. Some form of arbitrage can be illegal, for example insider trading. It's important to remember that although arbitrage can be a great way to earn a profit, it is not without risk. Traders should thoroughly research and understand the markets they are trading in, and always have a plan for managing risk. How to evaluate different arbitrage opportunities. Evaluating different arbitrage opportunities is an important part of making money with crypto arbitrage. Here are a few factors that you can consider when evaluating different opportunities. 1. Size of the price discrepancy. The larger the price discrepancy, the more potential profit there is to be made. However, it's also important to consider the costs of buying and selling the cryptocurrency, as these can eat into your profits. 2. Volume and liquidity. The volume and liquidity of the exchanges and markets that you plan to trade on can have a big impact on your ability to buy and sell large amounts of cryptocurrency quickly and at the prices you want. 3. Fees and regulations. Make sure you take into account the trading fees and withdrawal limits on the exchanges and markets that you plan to trade on, as these can affect the profitability of your trades. It's also important to be aware of the legal and regulatory environment in each country or exchange that you plan to trade in. 4. Speed of execution. Crypto markets are highly volatile and the price discrepancy can change rapidly. It's important to be able to execute trades quickly in order to take advantage of the price discrepancy before it disappears. 5. Risks. As with any form of trading, it's important to consider the risks of your trade and ensure that you are comfortable with them before making the trade. Some common risks include volatility, market manipulation, and hacking. 6. Repeatability. Consider the repeatability of the opportunity you are evaluating. If it is a one-time event and you can't replicate it, it might not be worth taking the trade. However, if the opportunity presents itself again, it might be worth considering again. We've reached the end of this video, but the conversation doesn't have to stop here. Leave a comment below and let us know your thoughts on crypto arbitrage, or if you have any other questions. We'll make sure to respond to as many as we can in the next video. We'll be covering how to arbitrage Bitcoin. Make sure to tune in and subscribe to our channel so you don't miss it. Bye.